welcome to another episode of the KYC podcast. Thank you very much for tuning in. I am super excited to have Rodney MacInnes joining us today. Rodney from Outlier Solutions. Rodney's a compliance ninja, has been a compliance ninja for over 15 years now. Is that about right, Rodney?
Oh, yeah. I think I'm pushing like 17 or 18 at this point.
There you go. All right. Do you want to tell a little bit about your background in the credit and money services business spaces and stuff, and before we kind of get into our topic here?
Yep, absolutely. So I started out my compliance life in money services businesses. I worked my way from kind of a sales position into a compliance position because I was sick of doing cold calling on the phone, which really helped me bridge the gap between kind of the struggles between sales and compliance. And so I understood what was needed from a sales perspective, but also from a compliance perspective. And so I was able to kind of help people understand and streamline the process. And really, I, for the most part, was the liaison between sales and compliance because I could speak both languages. I moved from there into a different role that was, at the time I started an MSB, and then morphed into a B lender. And so we did a lot of mortgages for new immigrants and business for self and things like that. So I got to see kind of many different sides of the real estate space. From there, I moved to Outlier, and that was like 10 years ago. And just for background, the term ninja is what happens is when you let nerds pick their titles. So 11 years ago when the company started, our co-founder Amber decided that like she had been referred to as a compliance ninja in her previous role, and that was what she dubbed herself, was the chief AML ninja. And the idea is that we can go in and execute on a mission, so do our deliverable, complete the mission, and then disappear into the night, and no one would ever know that we were there.
I actually quite love the term ninja, and I as much as I say it with a smile, I think it's actually a really cool way of looking at what you do. So that's cool. Wanted to chat with you because about a month ago, you and I were talking about risks and the importance for businesses of identifying risks and how those sometimes get hidden. And you had what I thought was a really neat story. So maybe let's start from there and see where the conversation leads. If you could kind of tell the story in as much as you are able to, anyway.
So the fun part of risk is it is such a broad spectrum, and the most difficult part of it is not knowing what you don't know. And that's one of the struggles within the sector. And real estate's been it's been regulated since day one. Since FINTRAC started regulating reporting entities, real estate was included. Mortgage brokers are more recent. So this is the change, and part of the struggle that we're seeing within that space is come September, mid-October. They're going to be considered reporting entities, but I'm very hopeful that at that time we get some quality information from FINTRAC about what we should be looking for when it comes to the risk side of things. FINTRAC will produce what are called operational briefs, and they're kind of a list of what they've seen from STRs and things like that will provide the industry with information about how FINTRAC looks at transactions when they conduct examinations and things like that. Mm-hmm. And without that information, this is where you get into that unknown area. And so I'm hopeful that we'll see something that'll be useful for mortgage brokers. And if not, it's kind of, look at your data and try and do the analysis, or refer to someone that has like understandable background in that space.
Yeah, it's funny. I think part of our conversation then, and I think what's still true, is the mortgage sector already has a bit of an idea on how to manage risks, because on some level they have to. They don't want to have a massive credit exposure. They don't want to have fraud. They don't want fraud to happen in their sector any more than anybody else does. And so from that point of view, they have already some of the thinking built into their practices, I suspect. But the operational briefs that you're talking about, I think, are going to be really important, because it's a different it's different characteristics or different indicators that I think we're looking for all of a sudden that people may just not have the language around yet. Is that
Absolutely.
is that about a fair way of reframing the concept?
Yeah, for sure. It's one of those struggles of, this is one thing I've spoken about since I worked in the real estate industry. And when we sit in examinations with clients and things like that is, or perform effectiveness reviews, is that real estate is inherently, like, for the most part, operationally compliant, because you can't do a purchase or a sale without filling out a litany of legal documents and collecting identification. And like, there's just things that are inherent within the operation of how a sale goes about. And so the struggle is understanding, exactly to your point, the other side of the equation that isn't always first or top of mind, I should say.
Yeah.
The other part of this struggle is with regards to money laundering. There's three stages of money laundering. So placement, layering, integration. Placement being the money going into the financial sector. Integration or layering, where it's moved around to obfuscate the source, the criminal source of the funds. And then the final stage is where you get into the real estate space. So at that point, most of the time, it's already been integrated and moved around, and it's distance from that criminal origin. So tracking and finding that, suspicious transaction is not as easy as it may be when you're on kind of the first stage of money laundering. And this has been one of the struggles within the sector, but it's not an excuse. It's not something that you get to be like, well, it's really hard for us, we don't have to do anything. FINTRAC in, I want to say 2016, I think, issued one of their operational briefs that was directed at the real estate sector that was like, hey folks, we've only seen 127 STRs from you, and
Mm-hmm.
there's trillions of dollars flowing through the Canadian real estate sector. And then, I don't know what, 3 years later, we had the Vancouver model happen.
Yeah.
And so these are some of the problems that the industry has struggled with from day one. And I think we're moving forward in the right direction, but it still is a long way to go. And this is, to that risk part of the conversation, this is where we're constantly trying to get better data, more information, and things like that from FINTRAC, which they understand, and they are trying to produce what they can, but they also regulate a lot of other industries. And so it's a bit of a struggle, but I think like I said, I think we're moving in the right direction on that.
Yeah. No, I mean, I think two things I want to kind of go back on. The first point you made there around how far into the money laundering process real estate ends is exactly the reason why I think the sector has really struggled in their knowledge. The amount of times people still will say to me, well, it's okay, there's no money laundering here, nobody shows up at my brokerage with a bag of cash. And that's like the regular refrain. And it just misses kind of the what might be the most important point of the whole thing when they say that. The I think what's equally interesting to me is, yeah, the Vancouver model comes around and has been pretty widely publicized and talked about, and literally books written on this topic, literally, um, and yet the number of STRs hasn't really dramatically increased yet. I I'm personally noticing a bit of a shift in the conversations I'm having with Canadian real estate brokerages and seeing more and more of them wanting to file, which is wonderful. I say wanting to file because there's that whole little web reporting not working thing right now, but that's
It's not a topic for another day.
that's a topic for another day. Exactly. Yeah. But there are a number of brokerages who are now seeing how they should be filing STRs, and that's really cool.
Back to your original question about kind of
Yeah.
situations and things like that. I'm going to tell a story from when I was a compliance officer at a company, mortgage broker company, and I kept seeing something that just seemed odd to me, and I couldn't make sense of it, and it rubbed me the wrong way. And as a compliance nerd, people understand this who understand compliance. From a sales side of things, this is something I'm not as familiar with folks paying attention to or caring about as much. For me, it was because I'm signing my name onto that transaction to say, like, yes, this can proceed. I want to be certain that it's not going to come back to bite me later. And so I kept seeing these bank statements that were like, they just looked different. And they didn't look different enough that it was clear that there was something obviously wrong with it. They were older. So as you start to, see bank statements all the time as you're funding mortgages and stuff like that for whatever purpose, you start to understand that, like, okay, TD actually just recently changed their font size, and so now the name of the person is a slightly larger than the address listed on the bank statement, and you start to understand that what it should look like. And
Yeah.
then when someone produces a bank statement that doesn't look like that, then it begs the question, why is this different? Sometimes they pulled it on their phone. That makes sense. Sometimes it's actually a physical bank statement that was mailed to their house. That makes sense. But you start to understand and be able to dig a little deeper into what exactly is going on. And in those instances, it was a very simple explanation. I downloaded it on my phone, or it was mailed to my house. That's why it looks different. So those simple questions immediately alleviated my concern.
Mm-hmm.
That said, some of them didn't. There was no clear response. The person was just like, I just, that's my bank statement. That's what was mailed to me. I was like, okay, no problem. So I took it upon myself to do some research, and frankly, I went home, I went onto the dark web, and I did a search for Canadian bank statements, and it was baffling. Yeah, like for $50, I think I could buy any major Canadian FI bank statement, and it gave me a template. It gave me the fonts I had to use. There was a how-to, and it gave me dummy transactions that I could feed into my bank statement to make it look legitimate, and I could put whatever information on it with whatever numbers I wanted to, and then all I do is save a PDF. $50.
Cool. That's
And
that's a good deal.
right, like, until you get your mortgage for more than you can afford.
Right. Yes. There's a bunch of problems with this. Let's be
That
clear.
is a big problem.
Yeah.
So it was one of those things where all of a sudden I had this, oh no, we've got issues here, and I
Mm-hmm.
don't know how to fix it, because they're like, the quality of these things, it looks exactly the same, but I found the thing that indicated what was different between a legit and an illegitimate um, bank
Mm.
statement, and it was the print form. So when you get a printed bank statement from a bank, it's going to have the little kind of dots and printer logic on the bottom of it
Yeah.
that traces it back to its origin. Where it's a PDF from a website, that's a little trickier. But what we're seeing a lot is folks like saying that it was a PDF of the online bank statement,
Right.
but it would have to be like perfectly level. And if it's slightly askew, that can't be the case, because
Right.
I mean, it's a computer. It's going to be as perfect as it kind of can be without being true level.
Yeah.
For all of my Rick and Morty fans out there. Um, so it's one of those items that once found, then we had to do a look back, and it resulted in, I think, somewhere between 20 and 30 STRs at the time on accounts that we had opened, and we're still, like, I mean, these mortgages were
Working with.
funded. There's not really
Yeah.
much you can do at that point. And frankly, the obligation is to submit that suspicious transaction report. From a credit perspective, that was not my department, so I can't comment on what happened there, because frankly, I don't really know. Once it's kind of approved, I'm subject to the ongoing monitoring, and that's where my kind of liability lies. So I want to make sure that the funds came in consistently from where they said they were going to, and we're not getting third-party deposits and things like that. But as far as how the credit was handled and the other factors involved, I don't know. And
Yeah.
frankly, it was B lending, so it was, the mortgages were not long periods of time. They were usually a year, maybe two, and they probably went somewhere else after that.
And by definition, they were a little bit higher risk to start with. So, yeah, that's an interesting story. What I like, I think, about that story, and why I really wanted to kind of have you back on and talk about that a little bit, is it highlights for me that there's no like one way that you're going to identify problems within your business. And I want to say, like, what you've just told us is a really interesting story about potential money laundering, but also about just downright, like, straight fraud that business probably would not have wanted to be involved if had they had the information at the outset. And so the neat thing in my mind about anti-money laundering policy and procedures is that you're actually like protecting your business as well from risk, which is where this all started, I guess, this conversation. Um, but the message I really want to pull out of it for our listeners is the importance of kind of thinking about things differently, or thinking about why they're doing what they're doing rather than just rote filling in forms, which is all too often how, certainly in the real estate sector, people view FINTRAC, where it's, well, we'll fill out the form, we'll be fine. And if that's the view of a compliance officer in the sector, then it's no wonder we're not seeing good data, because there is no good data at that point. So
I think you hit the nail on the head with, trust me, as a compliance person, I wish there was a flow chart or a checklist or something that was like, if this, then this equals suspicious. That would make life way easier. And FINTRAC would have been screaming that from the rooftops, because that's one of the things. The other thing we hear is like, this is FINTRAC's job. It's like, no, FINTRAC's job is actually to regulate the regulate the industries, and take what is produced by the Department of Finance, because they write the legislation. It's FINTRAC's job to interpret it. So for them to go out and do the adjudication of what's suspicious or not is like a massive overreach. And as someone who consults with numerous different businesses across numerous different industries, I don't, on a rare occasion, I will sit down with someone, go through a suspicious transaction, something they think is potentially suspicious, and talk through it to help them, because there's a lot of like items and idiosyncrasies between their business, their customer, their average customer, the information that they have on file, the amount of time it takes them to explain to me enough information for me to make a rational determination, or at least help them make a rational determination. Like when I do that, it's never me that gets to make the final decision. I'm talking that person into their decision. I'm helping them get to the final endpoint. And so this is one of the items, is that, yeah, there is no clear determination. And for the most part, one single indicator is enough to make your gut go, that feels off. When you get a second indicator, you're now like, okay, we're getting close to like, this needs to be escalated to compliance for an investigation. And in those instances, like I was referring to before, where the bank statement was it just didn't look what I expected, I asked, got an answer, and I moved on. It was really that simple. Instead of what happened later, when I realized that, we actually did take a bunch of bank statements that may not have been legitimate. And honestly, I have no idea. There's nothing concrete that says that it was or it wasn't. It just looked suspicious. And that's all you need to file a suspicious transaction report, is reasonable grounds to suspect. You don't have to know, you don't have to believe, you just have to like suspect. It looks odd, I'm going to tell FINTRAC about it.
And if there's another string to pull on all of that, it's that it didn't negatively directly impact your business. You didn't have to stop doing business with these people. Quite the contrary. In fact, you couldn't in most cases. They'd open the mortgage. You're doing business with them whether you like it or not. And I think that's the other fear that I've certainly heard from people typically in a sales capacity, where their livelihood is based on making the sale and on processing the deal on whatever industry that is. And there's no requirement to stop working. Well, there is, okay, if we want to get technical, the terrorist stuff, sure, okay. But for the most part, there's no requirement to stop working with people.
I'm also going to throw another caveat on that. If your customer is like, I'm just about to launder this $500,000 on this condo, I just need you to get this go through. I'm not going to give you any other information. And then my money's laundered. I'm going to sell the condo and I'm good. Don't do that transaction. When you know there's a money laundering offense involved, without a doubt, don't do that transaction. But where something is suspicious, or you've got a customer that's presenting as high risk, nothing says you can't do that. It becomes a risk-based decision within the entity to say that, yeah, this one's a little higher risk based on the information that we have, but I don't have anything here which blatantly tells me this is related to a criminal offense. actual money laundering, terrorist property, terrorist financing, something along those lines. And so that's where in those circumstances you want to do that, what is referred to as enhanced due diligence, which is basically something that you don't do for every other customer. So it's something you do above and beyond. So besides the identification, besides all the KYC information that you're collecting, maybe I'm going to do a Google search. Let's go Greg Dent scam or Greg Dent crime. And if I don't see anything, then I feel better about that. And so those are the things that FINTRAC is expecting you to do is something else. So it's not enough to just say, well, yeah, they're high risk, but we're okay. We're not risk averse. Let's just plow ahead. You got to do something else. So you need that little bit of extra. And so where, back to the bank statement thing, where I just ask the question, that meets enhanced due diligence requirements. So it's really prescriptive it's not prescriptive, sorry, on what you have to do. It's really based on the situation. So if somebody gives you an ID and you look at it and be like, that doesn't look anything like you, can you give me another piece of ID? And they say, sure, no problem. I put on 100 pounds during COVID. Like, okay, that makes sense. Your passport looks nothing like your driver's license, but you look like at least one of them.
Yeah.
Boom, that's enhanced due diligence right there. Like, it doesn't have to be complicated. It's really meant to either help you mitigate the risk or understand the risk or not. And then the situations where it's not, then you get to have the conversation with compliance, or frankly, compliance gets to make the decision on whether it's actually suspicious and triggers a reporting requirement.
Yeah, no, that all makes sense and super helpful. And for listeners who want to learn more about adverse media, which is one of those enhanced due diligence things, we do have an episode of this podcast specifically about that. So feel free to look that up. Yeah. So, yeah, thank you. I think this has been really a useful dive into risk and kind of the meat and potatoes of what an AML policy and procedure really ought to be about. Is there anything else that you think that we really should have talked about through the course of this that we've missed out? Any big takeaways that we haven't touched on?
One item that you just mentioned recently. So the industry is really focused on, the transaction, because sales is driving the transaction with a commission at the end of the line. And so there's an inherent incentive to complete the transaction. Otherwise, frankly, you're not getting paid. And this is one of the struggles that we see, is that folks are kind of like, I'm just going to pretend I didn't see that because I want to get my commission check. And it's trying to drive home the understanding that just because you see something that isn't a clear path to a closing of a transaction doesn't mean that it's not going to happen. It's an extra step. And like, as a brokerage, you're looking to help your staff understand the implications of not doing what needs to be done in those situations. And if you looked at any FINTRAC penalty that has occurred within the last 2 years, a huge focus on that is around unreported suspicious transactions.
Yeah.
Those are deemed very serious under the Proceeds of Crime, Money Laundering, Terrorist Financing regulations specific to administrative monetary penalties, which are the penalties that FINTRAC gives out. They are non-punitive. They're meant to encourage compliance, but at the same time, if you've seen some of the numbers that have come out, they are not small.
They seem pretty punitive to those businesses, I can assure you.
Yeah, but like, look at the US or Australia or things like that. Like, you want to see punitive, those are punitive measures when you're looking at like hundreds of millions of dollars. Anyways, it's one of those things that you really have to underscore with staff and train on what to do in those situations and what to look for. So back to the beginning of the conversation about the information that is provided from FINTRAC, that is what FINTRAC is going to look for when they come in. So staff need to understand that these are the things you need to be monitoring for. And where something just seems off, like, it's hard to convey how much better things will be if you just say something. Like,
yeah.
I don't know, this happened and it seemed kind of weird and I'm not sure what to do. Well, why don't you ask them where they got their bank statement? Oh, it was not from printed online. It was mailed to them. Yeah, well, that makes sense. I'm good. Suspicion alleviated. And like, on top of that, it is understanding within your business the team members that are there, and folks that maybe require a little more oversight, and things like that, or additional training and things to that nature is one of the items when we do an effectiveness review is we do staff interviews, which can happen in a FINTRAC exam. FINTRAC may pull certain staff and just ask them general AML questions. So in order to test the effectiveness when we do a review, we do that as well. One of the conversations I have with the compliance officer before I do that is, do you have any problem children? Is there anyone that you may want me to ask? And most of the time, the answer is no. But every now and then, someone's like, actually, so-and-so is always lagging on doing their training. I have to push them, and they wait right until the very last day to get it done. If you could just include them in that questionnaire, that would be perfect. And so it's understanding, we were talking risk, it's understanding the risk inside your business as well. So not only the external risk that your customers or clients are presenting, but the internal risks that you're maybe not aware of. And this is one of those big, you don't know what you don't know items. And, interacting with your staff, looking at transactions, reviewing the data that's being produced and things like that will really help drill down into what may require a little more attention.
That's a great way of phrasing it. I think, when I look at most of the people I talk with within the real estate sector, the two places where I can almost always get people to say, oh, well, maybe we aren't in a great place, is when I ask them, how would your agents know to make a other than low risk determination? What criteria would they use? What evaluative measures would they have for that? And normally the compliance officer says to me, I don't know. I mean, if they're from a country of higher risk would be the only reason. And that's like the better-ish answer. So I guess my point on all of this is I think that training piece that you're talking about and making sure that training piece is across the whole organization so that you don't have that problem child, because that's where your business has a risk that you may not be aware of. And you really don't want in your business. So.
It doesn't even have to be a problem child. Like the other issue you look at is consistency. So where Rodney, the compliance nerd, says this is suspicious, but I also do sales sometimes. So where I'm looking at a transaction and I say this is suspicious and we file an STR on it, and Greg looks at a very, very similar situation and is like, this is fine, and moves forward and doesn't file an STR. When FINTRAC comes in, they're going to say, okay, why did you file on this customer but not on this customer? Explain this to me. Mm-hmm. And that is a really, really difficult conversation to have. And so this is where, back to that training piece is extremely important for folks to understand those red flags that you're looking for, because if you're seeing similar red flags and you decide to report on one, you should probably be reporting on the others. And so that's the other is like, if you've done some recent reporting, maybe as part of your ongoing monitoring, let's go back through the last month, 3 months, 6 months, depending on how many transactions you're doing, and just like double check to see if those red flags were present in any other of your files. Because from a record keeping perspective, you should have reasonably enough information to kind of look for those things, but also it's like an easier mind situation that if FINTRAC calls, you're not wondering, oh no, was there one of those in the background that I missed? Yeah. Which is always, a looming fear as someone who's been in that position. Staying on top of the ongoing monitoring of the transactions going through and on the training with your staff will help calm you down when it comes to time for a FINTRAC exam.
Yeah. Lovely. Well, thank you so much for taking the time. I've really appreciated the chat. I hope our listeners will appreciate the in-depth thoughts around risks and the importance of creativity in determining risks and in examining risk and examining your business, I think is probably how I could best summarize this conversation. Yeah. So thank you so much.
Trusting your gut. Yeah, no problem. Thank you for having me.
Yeah. Have a wonderful rest of your day.
Yeah, you as well.
Thanks for tuning in to another episode of the Know Your Compliance podcast. If you'd like more information about our guests, have a story idea, or want to be a guest, please reach out to hello@kycpodcast.com. If you want to discuss your anti-money laundering compliance needs with a member of the Really Trusted team, go to www.reallytrusted.com/consult.